Good morning, everyone, and welcome to Nadex Morning Analysis, where we look at hot spots in the markets for today. My name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple, Brian Caprice. Before Brian and I take a look at some potential hot spots in the markets for this morning, I do need to share this trading disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So what are we looking at today? Let me just pop this up. This is what we're looking at today. It's Wednesday, September 1st. It is right before Labor Day. People are trying to, if your kids aren't already back in school, which we'll discuss, trying to squeeze every last little bit of summer before we start heading into the fall season. But here's what we've got going on. First, we already had our unemployment numbers come in. And if you can see, uh, it was
Did it
not
come
good.
in? Did it come in? Are you sure? I think only half of it came in, right?
Yeah, half of it came in. Half of it came in. We're waiting for the other half. That's not good. That is definitely not good. Now, the markets so far have just kind of shrugged that off at the moment, and we're talking about the equities markets. They might be, people are waiting to see. Well, one, we got to get the retail trader in there, but then the second thing that we've got is right after the open, we've got our manufacturing numbers. If these numbers come in line or positive, maybe that'll help counterbalance some of the negative news out of that employment change. I mean, obviously, that's a pretty big drop and way below expectations. These come in bad. Uh, that would be two punches in a row, right? This morning. I'm kind of curious how the markets would absorb that. So we're going to talk about that, and then we're going to talk about some potential opportunities in oil because we do have the oil inventory reports today, and again, it's a supply-demand thing, and there's a possibility that oil could be moving around at 10:30, an hour after the open, 10:30 Eastern. So with that, Brian, I'm going to flip it over to you, and let's talk about these employment numbers, how the economy is doing, these manufacturing numbers that are coming, and then just take a quick peek at the charts. The
Mhm.
Dow, the S&P, the Nasdaq, just a little
Sure.
bit, boom, 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 and then we'll focus on oil, and we'll try to look for some potential trade setups this morning with
Mhm.
all this economic news coming out. So there you go.
Yeah, actually, the first thing I was looking at to see, I wanted to see if the non-farm employment change number on Friday had changed because of the number today, and it actually looks like it has gone down a little bit. I forget. I wanted to say it was like 860 or something is what the original forecast was. So it's interesting that the non-farm kind of over like the full comprehensive number has already started to become adjusted because of today's ADP number. Because again, that does have a little bit of effect on it. But ADP has been gaining in popularity. It used to be just non-farm. Now the ADP non-farm change. Everybody wants that earlier and earlier and earlier and earlier data.
Yep.
So this is a pretty interesting. And as you mentioned, we're kind of setting ourselves up for like the 1-2 punch this morning. Right now, the markets aren't looking at it, but again, overall, tends to be more of a retail trader specific based number, but not necessarily the best. Again, manufacturing, it's expected to be lower anyway. And the question is, and again, we mentioned last night Australian GDP numbers. It was a case of it was supposed to be less, it was still positive, but they were a little bit overly negative. Question is, what do we do today? I mean, in this case, they were overly positive. It was higher than what it was previously, the ADP number, but they were just way too optimistic on it. So the question is, ISM manufacturing PMI is expected to be lower. Question is it overly optimistic, overly pessimistic, or did maybe they just get it, dead on today? So, definitely an interesting story. And, it's been a morning of a lot of different headlines. Remember, we do have the OPEC plus meetings today, which also, again, are opening us up to kind of headline responses. They are talking about, that they are going to remain focused and they're going to keep focusing on this, increase, right? Increasing the production every single, basically 400,000 barrels a day, even though they're talking about there's an upward demand revision. So we're kind of seeing this everywhere. And again, if you didn't see what the API number was, it's right there. The forecast was we would have a down draw of 2.8 million barrels, and it came in at -4. So and again, this is the industry specific report, so you got to kind of just take it with a grain of salt. But again,
Right?
twice as big. which again, higher oil prices don't necessarily help out the economy either. So, talking about 1, 2, even kind of 1, 2, 3 punches. I mean, that's one. We have another, potential piece here, and then we have crude oil right on top of it. And again, when you're looking at the other bits of news that we're seeing today, I mean, the ECB shouldn't discard risk of too fast inflation. You're seeing, all the, wages are not yet following inflation's course, meaning they're going to go up even more. We talked about that. Again, China, you're seeing, China has some mixed data today, but you're seeing a bunch of different pieces in here, of news excerpts talking about recovery, recovery, recovery. Put it this way: if OPEC is talking about demand increasing, I mean, they're always the last ones to admit that it's increasing,
Right, right.
because they're like, no, 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 no. They want to make more money. They're not, because again, remember, they increase supply too much, oil prices drop right very, very fast. So, yeah. So this number again, headline number, and again, I think between this and I told you earlier when I got this news update this morning, there was like, oh, it's absolutely dismal and Delta surging. And again, one of those things we mentioned yesterday that a lot of people are getting news or emails from schools saying, positive cases, positive cases, positive cases. I told you, family I know, they've had 18 days of school and 17 emails so far. But at the same time, I shared it with you. We're seeing that there's news out there that the 2 month cycle may be over, or we may be hitting the 2 month off the surge cycle
This
now.
is actually interesting to me. I mean, we
Hmm.
seem to be peaking. And
Yep.
if you compare it against what's going on in other countries and their
Yep.
cycles of the Delta,
Yep.
we should be at the peak.
Yep.
So hopefully
Spain,
there's light at the end of
and
the
that's the
tunnel.
thing. The United States always has and I call it the hold my beer syndrome, right? Everybody else, it's been a 1 to 1.5 to 2 point. And again, it's not just one country. It's India, the UK, Indonesia, Thailand, France, Spain. It's 1.5 to 2.5 months. We're there. We're peaked. And this is the crazy news. Florida down, Mississippi down, Arkansas. I mean, you're seeing all the early surgers have already turned at their 2 month mark and they're dropping. Question is school going to mess this up? And and again, how are we treating it today? These are going to be headlines. When one person talks about, are we at the peak? That may be the positive kind of push we need in the market today. I mean, negative employment. We could see ISM getting kind of crazy. We could see oil prices going higher because we have a huge downdraw. Remember, if there's a lot of demand out there, the first thing that the Fed has to say is, okay, this tapering needs to start sooner rather than later. Those are all negative factors for the overall indices. And again, dollar
Right.
taking a big turn as well this morning from a level that we talked about yesterday. But right now, the ES is kind of up, right? You can see yesterday it's kind of took that little bit of a bounce from yesterday morning. Right now, it's a lot more compressed. Right, we're kind of, let me drop this down to a 15-minute. You're seeing a lot more compression, a lot of sideways movement. It hasn't been able to break through that top at 45, 42. And right now, it's kind of, what do? We got sellers kind of stepping in. We got buyers kind of helping support it right now. I would say overall, the fact that we have kind of put a failure to go any higher, even though we were surging from yesterday, with the news today, I think this has the potential that it could be a kind of a red day out there. Like I said, people don't like more expensive oil. With these big downdraws, it's going to mean one thing, that the oil prices are going to pop back, the gas prices are going to pop back up again. So,
And if
I
the
would say that there's
manufacturing
probably,
numbers come yeah, if the manufacturing numbers come in poor on top of the unemployment data, which was poor, I mean,
mhm,
there's some signals that are going, you're concerned. So
mhm.
tread lightly for real. Again,
Yeah, and the market is. I mean, again, a number coming in half, right? Coming in half of what it's supposed to be should have had more of a kind of an effect on the market, and literally it just kind of popped up and kind of popped right back down again. So,
I'm wondering, again, we're even though we're beginning of September, we are in a kind of a dead period.
well, it's before Labor
Everyone
Day too, so just
and
again,
right
Labor Day
before
is very
Labor Day,
late.
I'm wondering how
Mhm.
thin the markets are, and are people really who's really paying attention?
Yeah.
And in conditions like that, you can see pockets of illiquidity, and
Hmm.
so who's to really say what all this is going to mean? Uh, is it going to be better interpreted next week after Labor Day when everyone sort of comes back and everyone starts participating again?
Yeah. So I don't know. Looking at it right now, I would say that again, we do have some buyers stepping in a little bit just below where we are. But again, that number was very. It was a very negative number. So at this point, it may have been the initial shorts that were actually getting taken out first. NQ is kind of a similar situation. We talked yesterday about NQ was punching down and ended up really just kind of flatlining and going sideways, and it found some buyers and kind of found a stabilization point in there that we had mentioned yesterday. But same thing, it had a high, but it kind of hit it. And again, I like the way that's kind of one of my favorite ways that candles form. When you're looking at that kind of candle formation, this red, that's kind of one of the candles. If I had to pick out like the best actual kind of body to wick, and no bottom, no bottom shadow at all, those are the kind that I like. So, I mean, even on a 15-minute right now, this is kind of set up more inside of that same short position. And, you look to see, how far can it actually run? Your 1 to 3 is sitting right there. Well, guess what? That's before the opposing zone there. So again, kind of one of those things that, if these roll, again, this is kind of set up for an opening print to the downside.
Yep.
YM, you can see, is already taken off. And remember, YM is going to be the one that is most sensitive to the manufacturing numbers. Again, Dow Jones Industrial Average. That tends to be where you kind of see it. But you can see that YM is already taken off. It's kind of the weakest. It's still up, but right now you can see since that news came out at 8:15, this has done nothing but kind of head straight back to the downside. And again, we had that one position yesterday, and we've had our 3 and our 4 touches, and again, all that basing in there. So we know that this level right here is an area that price likes a lot. The question is now, do we kind of punch down a little bit? Do we have a little bit of a pullback, taking that initial response, and then do we push down?
Right.
And you can see over here, yeah, there's some buyers in here, but again, we really don't have any kind of really true test of the downside inside of a kind of a decent time frame. Again, this was what, 9 o'clock at night. This was better. This was about 3, 4 o'clock in the afternoon. So again, it's kind of lined up that way.
If we roll over, I will say this, and this is something that you might want to be just looking at, and it's sort of the same on all these charts. And let me just put just a line in here. This is back on Monday. We might. These are the lows from Monday. Could we just kind of come back to where we were a couple days ago? And I think you're going to see that on all 3 of these charts, there's a spot. Roughly in there where we could go back. Although, we did spike lower on Tuesday. That first level is these lows on Monday, and then who knows? Below that, it just, it gets a little, a little bit further down here.
And Todd, since you have it up, is there a knockout anywhere close there on the top side? I don't know where the knockout is on the top. I don't have it up right now.
That's a good question. Let's just take a quick peek here. I'm going to do this on the Dow. Knockouts, indices, Wall Street. And let's just punch one of these up here. Yeah. The closest one we really the lowest ceiling right now is above where we are right now. So, is there something in here? Looking for you've got some upside. If it goes up, you do have some risk. $100 worth of risk on these. If it does spike higher, gives you a little room to breathe. But a punch lower, there is a potential opportunity in knockouts. You could also go through and someone could take a look at all the different call spreads. But again, the call spreads are going to have the premiums in them, and so something to look at. Definitely something to consider versus a binary option where there might be a little bit more room. If it does kind of collapse, there's that opportunity to make more money using a knockout or a call spread than you would with a binary option.
Yep. So. And the reason I ask is because, guys, here's the YM chart. If you guys remember yesterday, we talked about 35,500 being a big psychological level. There's the level that I'm just extending across at this point. There's that knockout bracket sitting right there. There's the touch in the overnight, right at the 3 o'clock in the morning position. So it's one of those things that, you can, do some setting and forgetting. And again, your 1 to 3 is right there. So there's your 1 to 3. You're out of the position with the knockouts in the overnight. So, people always ask, it's like, oh, do I have to be there? No, you don't have to be there. You can set kind of, limit orders to be able to put these in. You can see this is the ideal situation when you have a knockout that is coming right above where a zone is looking at. And again, there's your 1 to 3 in the overnight. You could have woken up right now and been like, oh my God, look at that. I'm already out. How great is that?
Yep.
We're right at an area where you'd be, cautious with it. So I think YM is definitely in play. Russell, kind of same thing. Russell has Really, I mean, Russell kind of started at 8-ish, a little bit early. And again, we know we're in a higher level zone. It ended up kind of basing here and kind of punching through. You can see it hit it again, and then started the base in there. It really fought to get through that level, but now the exhaustion level is in. And kind of the same thing. If you take that same level of sellers before, they didn't really become buyers here. It just kind of stumbled back down again in this kind of downtrend with 3 lower highs. Again, it's kind of set up in the same way. And this is right now the strongest. So if they start to turn, you can see it's up 0.55%. But of all of them, it's kind of like this is the biggest candle. We're finding these buyers right here. But if it can break through just a little bit, it's another drop of 8 points to the downside before we have any buyers coming. And again, that takes this and sways this definitely down the other direction. And again, you can see it already starting to move.
Let's do a quick peek because we're running out of time here. And I know we started a minute late. Let's just take a quick peek at oil going into that. An oil setup potentially going into those oil inventory.
Yeah, I mean, yesterday we had the down up, like we mentioned. Today, I would say it's definitely been more of a down type position. The API number kind of set it up a little bit. Like I said, I think a lot of it has to do with now that OPEC is talking, it's kind of like, oh yeah, they're increasing supply. That should bring price down. It's a lot of this is going to depend on what this actual number is today. And like I said, just in fast review, again, this is it was definitely worse, which means oil should have went up. OPEC producing more oil, though, they said, despite demand, it's kind of one of those things that people are like, but with it pushing back down, I mean, taking a little bit of a zoom back again, removing the green and the red of it, you can see that we're definitely, from really kind of from this level here, it has been kind of a channel that's been sideways. And, we had another one here. We had this, the week before, last week was straight up, the week before was straight down, but not uncommon to get stuck in these kind of sideways based channels. So, I would say based off of what we see in API wise, we know we're in an area right now. And is it the best area? No, but I mean, buyers have stepped in here, buyers have stepped in here, buyers have stepped in. The API number is not good because again, that's kind of a demand. If people are not as many people are going back, it's like, oh, do we need as much gas?
Right.
It's kind of one of those, supply and demand type driven things. But if the actual inventory is down, that means, hey, we may not have as much. And again, there can still be disruptions. I mean, we just came through, and remember, every time there's a hurricane, the prices spike because there could be absolute destruction of the refineries. It didn't happen, which is good. But again, with this collapsing down in the European session, I almost wouldn't be surprised that if we find a level of basing, look for an opportunity to go long before the actual news release. And again, you can see it's starting to react to news as traders are coming online at 9 o'clock, and they're seeing that API number and saying, "Whew, maybe the economy is not that good. Maybe we're closing back down again."
All right. Thank you for that. With that, any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian, hit him up at support@keeptradingsimple.com. Wednesday, Sep 1, we're, coming in on the end of summer. What are we looking at today? We've got the manufacturing numbers right after the open, so stay alert. And we'll see how retail traders also digest those unemployment numbers, which weren't very pretty coming in for the month of August. And then we've got these oil inventory reports an hour after the open. So take a look at oil for some potential opportunity there where you might see some volatility. Thanks for joining us this morning, everyone. Brian and I will be back tomorrow morning. With that, we want to wish you all good luck in the markets.